Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 25th, 2025, and we're diving into the first quarter earnings report of WTW, a leading global advisory, broking, and solutions company. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. WTW has just released their Q1 2025 earnings, and there's a lot to unpack, from revenue changes to strategic initiatives. Let's get started.
Revenue and profitability overview. Let's start with the top line. WTW reported a revenue of $2.22 billion for the first quarter of 2025, which is a 5% decrease compared to last year. However, they achieved an organic revenue growth of 5%. John, can you elaborate on this?
Absolutely. The decrease in reported revenue is primarily due to the sale of Transact, but the organic growth of 5% is a positive indicator. It shows that WTW is effectively growing its core business despite the divestiture. The operating margin also improved significantly to 19.4%, up 740 basis points from the previous year, which is a testament to their operational efficiencies.
And what about profitability?
WTW's net income for the quarter was $239 million, a 23% increase from the prior year. This is a strong performance, reflecting their ability to manage costs and drive profitability even in a challenging environment.
EPS performance and analyst expectations. Now let's talk about earnings per share. WTW reported an adjusted EPS of $3.13, which is slightly below the analyst forecast of $3.20. John, what does this tell us?
While the adjusted EPS of $3.13 is flat compared to last year, it did fall short of the $3.20 forecast by analysts. This slight miss could be attributed to the absence of earnings from Transact, which was sold last year. However, maintaining the same EPS as last year despite these changes is still a solid performance.
How many analysts were involved in this forecast?
The forecast was based on a survey of 10 analysts, which provides a broad consensus on the expected performance.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did the Health, Wealth, and Career and Risk and Broking segments perform?
The Health, Wealth, and Career segment reported revenue of $1.17 billion, a 13% decrease due to the Transact sale, but it achieved a 3% organic growth. The operating margin improved to 26.7%, thanks to cost savings from their transformation program. Meanwhile, the Risk and Broking segment saw a 5% increase in revenue to $1.03 billion, with a strong 7% organic growth, and the margin increased to 22.0%.
What strategic initiatives are they focusing on?
WTW is concentrating on enhancing efficiency and optimizing their portfolio. They are also focused on driving growth and margin expansion, which is evident from their improved operating margins across segments.
Cash flow and capital allocation. Moving on to cash flow and capital allocation, WTW reported negative cash flows from operating activities. Can you explain this, John?
Yes, WTW reported a negative operating cash flow of $35 million and a free cash flow of minus $86 million. This was primarily due to the absence of cash collections from Transact and increased compensation payments. However, they repurchased $200 million worth of shares this quarter and plan to repurchase up to $1.5 billion, subject to market conditions.
What does this indicate about their capital strategy?
It shows a commitment to returning value to shareholders through share repurchases, while also maintaining flexibility for potential investments in organic and inorganic growth opportunities.
CEO's perspective and future outlook. Finally, let's discuss the CEO's perspective and the future outlook. What did Carl Hess, the CEO, have to say about the results?
Carl Hess expressed satisfaction with the solid start to the year, highlighting that the results were in line with expectations. He emphasized the company's focus on accelerating performance enhancing efficiency and optimizing their portfolio. Hess is confident in WTW's ability to help clients navigate economic uncertainty and achieve strategic and financial goals.
What can investors expect going forward?
Investors can expect continued focus on growth and margin expansion. WTW is well positioned to leverage its global expertise and strategic initiatives to drive long-term success.
Key takeaways. In summary, WTW delivered a solid performance in Q1 2025 with strong organic growth and improved margins despite a slight miss on EPS expectations. Their strategic focus on efficiency and portfolio optimization positions them well for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing WTW's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on WTW's performance in the comments below. Until next time.